Hello everyone, this is Teddy Keckstead from ForexTrading Unlocked, and we are here on July 29th, 2020 with the Forex Trading Analysis webinar video for you. And real quick, we want to pull up our disclaimer just to remind you that this video is for illustrative and educational purposes only. And if you could do us a favor, please subscribe to our YouTube channel as we are getting into this. And also, if you are interested in learning how to trade some great signals, both buy and sell, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, let's get to our live stream here. We are at the Forex-Trading-Unlocked.com website. We have the workstation page pulled up, and we already have a dollar index chart pulled up. Let's make this a little bit bigger for you. Okay, there we go. All right, so the dollar index is finally confirmed on a weekly basis, taking out a bullish trend that it has been maintaining for quite some time. Now, when I say quite some time, that means it goes back all the way to it's been a 12-year rally going back to 2008. And as you can see, off of this last major swing low here that was in 2014, where we then bring it to this swing low of February of 2018, 4 years later, that support line right there was taken out last week. So on a monthly basis, we're getting close to the close. If we settle below this, this is one of our first triggers. But then also we have another big sell signal here for the dollar index was the low that was back in March. Taking that and settling in below that on a monthly basis will be something in a big way as far as the trend, because that would mean that we would have had this high back here in January of 17 would have been our high for this big long-term trend. This low here in the beginning of 2018, this would be our last swing low, higher move low, supporting the uptrend that has been going on for quite some time. Now, what happens here is the swing high that we had back in March. This swing high now tells us that we failed to take out this swing high, and now as we are taking out this upward sloping support, we're targeting this major swing low over here. Now, for the dollar to get down to here, this is an area where you might find some support, especially because you had tops that had been there before. So this is a big area that we'll be looking for, but this is still a nice little slide here from 94 down to 88 in the dollar index. That still has the euro and the pound and even the yen and the Canada and a bunch of other currencies putting pressure on the dollar for a while to go yet. And even on a symmetrical way, this market definitely targets somewhere in this zone down in here. So we'll give you a little target area right here. Somewhere in this little area here is where most likely, now this is on a monthly basis, so don't think this is happening just by the end of the summer. It could happen by September, October, it could happen this month, who knows, there's still a few days left. But this is our bearings to give you an idea of where dollar direction is overall. And since the market dollar index had been in a bull market for quite some time, why wouldn't it? Okay, so now we have the monthly. As you can see, the euro has exploded to the upside. This market as well in March set a higher move low after having made a lower move high. So this is significant, whereas not only the dollar index, but we have a rotation in many of the major currencies. Now, where the dollar index has started to break out, let's look at this. The euro is coming up against some key downward sloping resistance. This is the slope that is maintaining the bearish trend. So if these bulls are serious and they go and catapult this market, does that mean it's going to go up to the 120, 25, 130 area? Very likely that this could happen over the next few months to the next year. Believe me, it may not happen in a where this is. Gotta look at the volatility here. Except for March, this month right now in July of 2020, this has the biggest range that we've seen going back for all the way to February or January of 2015. So this is a major momentum move here. But just like it's going up, it can like with this strength, it could reverse right on this downward sloping resistance line. So let's go look at the daily and see where we're at. Now, see on the daily, we're buffering right above that, right there too. Now, yesterday we had a little turnaround in the Euro US dollar. It was a profit-taking retracement. After that, look, obviously you can see what has happened. We are trying to make higher move highs. Now, the interesting thing is that the euro, the biggest component of the dollar index, has not made a higher move high yet. It's trying to. It's Fed day. I would use caution for the next few hours. I would say that we're probably going to have a whippy trade going on later, and after that we'll see what happens. So let's see what's going on in the British pound US dollar, which is the second biggest component of the dollar index. Now this, on a daily basis, as you can see, is breaching higher move highs. It continues to pressure resistance, and this has been in an uptrend since March. So there's no surprise there as to what's going on with this one. Also, on a monthly basis, you can see that this market, although it is excuse me, definitely having a bigger range than it has for most months, and does in most months, back in March it had a much wider range. So the euro, which is showing much more of a directional move than the pound is. However, this one also is coming into some key directional resistance. And let's go back to our daily. And as you can see, we still have a ways to go. Now, if we had a move like we had in March when we bounced like that in a couple of days, we could be there in a heartbeat. Is that going to happen? Who knows? Markets go in like they, or go out like they go in. Right now, if you look at things on a symmetrical basis, yeah, let's see, we could go. Yeah, I don't see a big move like that. There's no reason to touch off a monumental rally that you would see anything to spark that kind of volatility. However, I do think that you have the ability by September to get up there. That's for sure. Now, are we going to have some pullbacks along the way? I don't know. Right now, it doesn't seem like this thing wants to. The dollar just keeps on getting battered. So any dollar bulls that try and pick a top right now, you're getting just crushed. Range traders, I would be very cautious selling into new highs versus buying into into lows. I think that's probably buying dips is a better deal for that. And for bulls right now, if you're in it, keep riding it, and until you have a reason to say this thing's turning around, I would say keep on riding the bull. I think we're having a really good shot at hitting the dollar index. As obviously it's going lower because of these currency moving like this. This is just a sign of what's going on. Now, I wouldn't necessarily say that all of these other currencies are that strong. I think that right now we're just seeing a erosion of strength in the dollar, which has been in a bull market and definitely in a strong sideways market for 3 years. So for it to, in a short-term basis right now, yeah, it's looking like the dollar wants to pull back, which is also kind of good for the U.S. because it'll help to maintain profits for the U.S. equities, which will help to keep the market afloat. So here we have, let's see, Johnny Garb is here. Hey, Johnny Garb, it's nice that you're back watching us. So we're looking at the pound U.S. dollar, and we already looked. I don't know if you saw us from the beginning, but we were talking already about the dollar index and how it is guiding direction. Now here is something that if you want to talk about almost mimicking the dollar index, definitely a big component, but not the biggest component, is the Swiss franc. Look at this. This market just continues to hammer this the dollar. This was very reflective of what a dollar index chart looked like. Now it's getting very extreme. Now that's the thing that makes me wonder is like how extreme and how consistent can this rally actually be maintained. The Swiss is a flight to quality currency, just like the yen and the dollar. If you look at it overall, the U.S. dollar Swiss, if we go back to 2012, we have to go back to 2011. This is when we had a low point down at 70 cents. That's 20 cents away. Now the irony of it all is that we did have back in 2015 we had this low here at 82. This is somewhere where we could probably have a very good chance at targeting. Whether we would take this out or not, I wouldn't be too big on that one. So now the major reason is if you look at it, This market bottomed here in 2011 and basically has been in a sideways range trade for a very, very long time. So the Swiss, remember, is a not just a reserve. It's not really a reserve currency, but it's a flight to quality currency. So it just means that it's very stable. So this means between 87 and parity 03, the U.S. dollar has pretty much maintained somewhere in this range for the past 12 plus years, and except for this one minor dip here, basically you can go all the way back to almost 10 years, where it's basically been inside this range for the bulk of the trading. So for downside momentum, US dollar Swiss doesn't really have very much more to go. We should find some support most likely around this 87 area. Now obviously the trend in the short run is very, very bearish, and especially when you look at it on a weekly basis, we break it down a little bit differently. You can see how volatile it definitely has been over the, I mean, this is crazy. Like here we go back to February and March. Everything started to subside, and then the Swiss is usually a very controlled currency where it does trade in tandem with like other currencies against the dollar or with the dollar. But right now it's just in a free fall where dollar weakness is just, it's prevalent against the Swiss franc. And the question is can it be maintained? I mean, the velocity of the slide is very, very severe. I mean, if you look at it from May 18th to July 27th, in just over a month, we've had a slide that mimics what had happened from the middle of February into the beginning of March, and that was when we had the whole coronavirus pandemic thing just exploding globally. And then the market bottomed and shot up like a balloon underwater within just 1 week. I mean, talk about an explosive move. You bottomed at 91 cents, rallied all the way up to 99, and now here we are. We're back making new lows at 91.45 as we speak. So the question is, can this velocity be maintained? Well, obviously markets don't trend in one direction forever. The pressure is on, and I think that this would be where you're probably going to look to, if we see a consolidation here, this is probably when you'll see a corrective move versus some of your other major currencies. Until you see something there, folks, I guess you have to ride the dollar bear, because that's the only thing that we can see with this trade, right? At least as far as the dollar is concerned versus these currencies. The yen also, here's the yen just pounding it. What happened here, the yen was this quiet currency that couldn't have any volatility, and let's see, yeah, the yen is crashing, and since it's 30, because I think it's going to bounce back up. Yeah, if you're looking to, Johnny Garb's got a little trade on here, it looks like, in the US dollar Swiss that we were just talking about. Considering that it's Fed day, I think on an intraday basis you might have a nice little opportunity on that trade. I would be careful, keep your stops tight, because you know how it goes with the Fed. Without a doubt, I like that. And just as a little reminder, I don't know if you stepped in or out real quick, just remember the Fed. Yeah. So otherwise, I think you got a nice little short-term fade there. Not a bad deal. So now we're looking at the yen here. This one has fallen out of bed for the past few sessions, actually a week. And today it made a lower move low, and now it's pretty neutral. But that's because we're heading into Fed day. In a few hours, 3 hours from now, it's going to be, is it going to be a crazy Fed day? I don't know. It's really tough to say as far as, I mean, could we have a volatile rally and then break? Absolutely. But there's nothing I think that the Fed's going to say that's going to be outside of what people are already expecting. Not that they won't, you never know. But I think right now they're just going to reiterate the fact that they are buying treasuries, they're buying corporate bonds, and that they will continue to support this behavior as long as they need to. Why would they change that policy? So that, I think, is just going to be a reiteration. As far as the dollar, if they're going to talk about the dollar falling right now, they're going to say the dollar's been in a bull market for 12 years and has been pretty strong and sideways for 3 to 5 years. So there's really no reason to be concerned about right now the dollar slide that's going on. I wouldn't say it's a currency war that's going on, and if it is, well, it can only benefit America right now having a weaker dollar for the short run for sure. So that's something that we want to pay attention to and keep in mind for our dollar direction. And once again, this market here, the Japanese yen's been in a big sideways for a while, but as we can see also, remember this market had been in a bull market before this whole coronavirus thing hit, and on a monthly basis. Then all of a sudden everything turned here. See, we had this bounce back in August of 2019, and this market was pressuring, looking for a breakout to the upside, which it did, and then it failed, and then we had this whole coronavirus shakeup. So this is something also, if you look at it, where dollar direction is going. On a longer term basis, it's a monthly chart, we're making lower move lows and lower move highs. And this is what we have done here. We've come back to, and I think that this is the critical area. I would be very, very leery of any trading below here, because the low that was set back in March, if we fail from here, this is going to probably have the US dollar targeting areas where it was back in 2012, which would be back at this 80 level. Is that going to happen? Well, here's something that you might want to take a look at. If we look at the overall trend line here, this little support line here kind of maintains the bullish move from 2012. However, we know that this market hasn't been rallying for the past few years, because since back in 2015, June of 2015, this market topped out, and we have been trading, lower since then. And we also have this nice little wedge here. We could go off of this low here, but I say we go off of this low here. If we take out the volatility of March, this right here, just discount March alone, and even that beginning of the thing, we're falling out of this wedge. This is where we're going, and right now the first target I would say is the 195 area here, but overall I think we have a shot at coming down towards this 95 area. So that I think would be the more critical area to look at, and then I would use somewhere around this here 94. This would be your zone, I think, where you could find maybe a decent short-term corrective bounce somewhere around there, but this is on a super long-term basis. All right, now let's look at the Australian dollar, US dollar, and see what's going on. The Australian dollar, US dollar has been rallying pretty strong against the dollar, as you can see, since back in March. We talk about a buy down here at 55, and now it's trading 71.72 just in 4 months. 4 months. This is crazy. The appreciation from this low all the way up here. And here's another interesting thing. Let's look at the longer term trend here. So here's this trend right here, and then let's go from this one, and we'll go to this one. So we've had an upside breakout this month. It spiked last month, but it didn't settle through it. But this is definitely confirming some really good strength, at least. Obviously, from where we're seeing, the momentum is being maintained. However, this is a very, very steep velocity right here. Now, the question is, how strong can this be maintained? Well, if we look at this here as our median point back in March, markets tend to go out like they came in. So if that's the case, we pretty much stabilized from where we were at the end of 2019. Now, obviously, we're trading higher for the Australian dollar. Does it mean it's stronger? Well, this market here has been making consecutive lower move lows and lower move highs. So, and this here could just be a lower move low it made in March, and now we're coming into a lower move high. So the reality here is I think that you have to get past this last swing high, which was back in January of 2018, so up at this 81 level. Only a rally above there, which would also put you in a point to take out this downward sloping resistance line, would confirm a really big bullish base down here, and strength for Australia versus the dollar. So we'll see how things pan out. Right now it still is a bull. The New Zealand dollar, US dollar, is also a bull right now. As you can see on the monthly basis, it continues to take out resistance, and it looks like it wants to maintain that posture for a while still. Even on the daily basis, you can see that it has been buffering resistance. Obviously, the past 2 days, a little bit of a challenge, but that's okay. This market as a whole has been grinding higher. So as long as it's a grind higher, we don't expect it to be blasting through resistance like the Euro US dollar. And that may be something, that's something we're going to look at in another minute and give you a new perspective on things. US dollar Canada, let's see what's going on here. The US dollar Canada today and yesterday, not much of a range trade. Not much of a trade, rather, a very tight range. Yesterday it made a lower move low. Today it has not. It's been trading inside pretty much most of the body of yesterday. It's going sideways. Maybe there's a calming. And this could be a thing where we're not looking for the dollar to become a bull, but it wouldn't be out of the realm of possibility for a corrective rally to happen for the dollar for at least a short term right now. So we'll see. We're going to be watching for signs, and right now we don't have any signals, so we're just going to have to ride the dollar bear. The U.S. dollar Mexican peso also is continuing to pressure lows, even though it is positive on the day right now. I think with this Fed day, I think it's overdone as far as what it's done today. And now they're just waiting on pause, like they're in a siesta, if you will, until 1:15 Chicago time. After that, we'll see what happens. I think you might still see an erratic move. The algos will be pressuring stops to the upside and the downside, I'm sure, pressuring things and trying to make a swing trade happen. I would wait until things calm down, and tomorrow the Asian markets open this evening, and also European markets open later on tonight, overnight, and that I think is when you'll start to see a stabilization of all the currencies, major currency crosses rather, especially versus the dollar, and then we'll be able to figure out if we're going to have maybe a little momentum swing trade either to the upside or the downside. So now let's go back to the Euro US dollar. Now why do we come back here? Well, this market has been doing some very interesting things. Look at how strong it is. Well, let's look at the euro versus the Japanese yen. We're looking at it on the same one-way side. Very interesting. On a daily basis, it's strong today just like it is against the dollar, but this thing took a turn versus the yen. What was it? On July 20th, so a week and a half, a little over a week ago. Interesting. So right now, unless it takes out the high from a week ago, the euro may be starting to run out of gas against the yen. Let's look at the euro versus the Australian dollar. Now, the reason we're doing this is because we're trying to gauge what is the actual strength. Look at the euro versus the Australian dollar. Well, it's a little positive today. Did make a higher move low last week, but overall it's been consolidating. It's pretty basey. Is it bullish? No, it's neutral to higher is all it is against the Australian dollar. Let's look at the euro versus the New Zealand dollar. Here we have the euro gaining some strength, and we have had a low that was set back here in July, on July 20th. And we have taken out the lower move high, we made a higher move low, and now we've made higher move highs. Short-term breakout, euro is gaining strength versus New Zealand dollar. Okay, so that's where we're seeing strength. Let's see what the euro looks versus the Canada. The euro versus the Canada is pressuring through some resistance. So we have some euro strength definitely showing here. Very interesting. Okay, so the euro, while it's also being strong against the dollar, one of our trading partners is also being strong against. I wonder what it was doing against the peso. See, now what we're doing here is we're doing a little walk around the currency block to see what kind of strength we do or don't have. So the euro definitely is having strength in the North American trade zone versus all of the currencies. Seems to be neutral to higher and maintaining that ability. Then we have the Asiatic rim that we looked at, and it's obviously not the same. So now let's look at the euro versus the Swiss. So the euro versus the Swiss, obviously it's been very strong. You can see here had a nice sell-off yesterday, but it's starting to try and give it a little bit, gain a little more strength here today. Now the question is, can it take out that high back in June on June 5th? Well, we'll see. I think that it's having a little bit of trouble here, and it's most likely, even though it's broken out to the upside instead of bottom back here on, was it May 18th? There was a big radical rally here and a big slide. I think you're going to see more consolidation here. And the Swiss, remember, is a very static, not static currency, but it trends, but then it sets a basing range, because the Swiss is a flight to quality currency, and once you have that risk variable off the table, when the flight to quality is gone, then you have true value. So that's why you have that a lot of times a basing range. Let's look at the euro versus the British pound one more time. As you can see here, it has been grinding higher today. It is trying to recoup some of the losses from yesterday, definitely showing strength. So while we see all this, let's go back to the euro US dollar. This gives us no reason to see that the euro would not continue to press on versus the US dollar. So as that's going on right now into the Fed day, we'll see what happens, and who knows. I would expect to see some extreme volatility going our way over the next probably, not right now, it's almost 11 o'clock, so we've got 2 hours and 20 minutes basically before things start to get a little edgy, and then we'll see what happens. Right now I would say, unless you're already in a position and you have your stops set, stay where you're at. Don't try and get crazy with things, and wait it out. Wait until after the number comes out. Well, not that there's going to be a number, but you know what I mean, the Fed meeting, until that is over. So with that being said, I want to thank you very much for watching this video, and please subscribe to our YouTube channel and check us out.